everyone, and welcome to the global edition of ACY Securities The Chat. And with me this morning, I have Aladarish, who's head of global marketing and sales, and we're here to talk to you about markets and the opportunities that markets hold and our products hold for you. But first news overnight, Ella, Bank of England surprised many people with a rate hike. I have looked at the 25-year chart of the Bank of interest rates in the UK, and it's really a non-event. In other words, there's a whole lot more hiking to be done around the world. And as we know, yesterday the Fed said they're forecasting themselves to hike 3 times, but we know that the Fed gets forecasts of themselves very, very wrong, right? So I'm forecasting 5 rate hikes in 2022. What are your thoughts?
Well, it's honestly surprising. You see a hike of 0.25, right? It's to basically try to deal with the inflation that's going on. But there's a lot of COVID cases. How do you feel like this is going to affect?
Yeah, I mean, in the last few days, actually, the mobility data around London has seen office workers, 50% of office workers or 50% of the previous traffic not appear. So all of a sudden, the number of people going into the City of London has halved in just a matter of a few days. So people are self-regulating, if you like, on this whole situation. And it is horrific there. I mean, 75,000 new cases, but again, how many hospitalizations? Unfortunately, there is a hospitalization surge. People are worried about how bad that will get. Did you see in New South Wales this morning, in Australia, New South Wales, 2,200 cases. For us, that's a lot. It's a big jump. And our hospitals have been placed on red alert. So they must know something they're not quite telling us to do that.
True. Do you think the RBA is going to follow the BOE in England?
Well, I mean, the RBA should be ahead of both the Bank of England and the Federal Reserve. We've had a stronger economy sooner. We've got interest rates at 0.1%. We've had bond buying. I mean, it's been complete nonsense. And I said so in real time 6 months ago. It was complete nonsense what the RBA was doing in Australia. And we should never have had a bond buying program. And interest rates should have gone up 3 months ago. So hopefully they will be going up soon. They have to go up. You can't sit on historic crisis, economic crisis levels when, quite honestly, there is not an economic crisis. It doesn't matter even if we had a little smaller negative growth again. We are having below trend growth. I'm not forecasting a super strong economy. It's just that we're going to have below trend growth, and you don't need crisis interest rate settings that are creating asset bubbles in the property market and elsewhere.
So when do you think the RBA is actually going to make a change? Is it going to be in January, February, March?
Because they're 2 very different things, right, everyone? There's 2 questions. Whenever you think of the RBA, there's two questions. One is, what should the RBA do? So that's for intelligent people to work out what the Central Bank of Australia should be doing. And then the second question is, so that's what the RBA should do. What will the RBA do? And that's entirely different, right? Because it's the reverse Bank of Australia. So they will be looking in the rear vision mirror until they've got enough data that makes their movement so confident, which means they're always behind the curve by definition. So the RBA should have already hiked. When will it hike? It'll probably hike after the Fed, because that's kind of how they earn their money, is by following what the Federal Reserve does, saying what the Federal Reserve says, okay, with a delay of a big delay. So that's what the RBA does. So the RBA will be late hiking. And the reason I go on about this so much, Alan, is that, and why I'm a little bit passionate about it, it's actually going to cause a lot of harm to our economy further down the track. Because what it means is, by not preempting what's happening in the world, central banks fall behind the curve, and then they have to do these monumental rate hikes. It's, for instance, when going into a crisis, instead of beginning to cut early just in case, not waiting for data, just looking out the window. I call what I do look out the window economics. And we've got great windows here at ACY, by the way, everyone. So a great view of the world, 360 degrees. And when you look out the window and you apply common sense to the world, you can see early on you needed to do some preemptive rate cuts, for instance, going into the GFC. But Reserve Bank of Australia, Reverse Bank of Australia, was the only central bank in the world to raise interest rates 3 times in the middle of the GFC, and then have to cut rates catastrophically. So what I'm saying is, if you move and you preempt things that look like they could happen in the economy, if you move early, your whole interest rate cycle can be a calmer curve. If you move too late on everything, crisis, then you have to smash interest rates lower. Then you're too late to raise rates. You get the same thing happening in reverse, and they're going to have to bang rates higher really aggressively. They'll overdo it then. Then the economy will contract again.
Yes.
You know, in the GFC rate hikes, they caused a recession in New South Wales and Victoria. So they'll do that again to the economy. And so you create these waves within the economy that are of a greater amplitude than they need to be. So you create this roller coaster boom bust cycle, or whatever the natural boom bust cycle is, you add fuel to that and you extenuate that by poor central bank governance.
Yes.
So, you know, it is a real problem.
Yeah, so it seems there's a bit of an uncertainties with the RBA in Australia. We don't know what they're doing and when are they going to do it. What do you think there are opportunities in the Australian market in terms of the Australian dollar?
Right.
Is it a good time to buy, good time to sell?
Right.
And what about the ASX, for example?
Yeah, so Australia has, there's a lot in that, Alla. Well done, you've put it all out there.
Yeah.
The Australian situation is, as a trading nation, the global economy, the state of the global economy, the external aspect of what's going on, the value of our currency are all very important to our domestic economy because they do flow through. We've had the experience of, you know, it's something like 24% of Australians now were either born overseas or their parents were born overseas. That's the highest number anywhere in the world. The next country closest to that is around 13%. So we are an extreme case. And we had that support to our economy, our domestic economy, vanish over the last 2 years. So, you know, it's nice that we've had good aggregate economic data due to all the stimulus measures and an extremely stimulatory interest rate environment. And that, you know, the government stimulus measures in particular really did protect us from what could have been a far more severe economic downturn. But it was probably too much, went on for too long, and the RBA should never have started bond buying, which is creating asset bubbles. So what I'm seeing is that as we see the real economy of Australia come to the fore as stimulus measures wear off, it's going to be good growth, but it's not going to be great growth. And it's probably going to be below where we should be because there are ongoing harm. And we're just speaking around the office this morning and again highlighting how for a lot of small and medium-sized businesses in Australia, and a lot of the families of those small and medium-sized businesses, owners and employers, workers, this has been a catastrophic experience from which they have not yet recovered. And that is long-term economic damage on top of the human tragedy of it all. And you know, you probably know some cases yourself where things like that happen.
Yeah, a few friends of mine actually contracted COVID.
Yes.
Both here in Australia.
And you had a business friend with some gyms or something?
Actually, a friend of mine actually contracted COVID. He was fully vaccinated, and it was tough for a couple of weeks for him. But,
so that's the
luckily
individual
he's good
level.
now.
Did you have a friend who owned a gym or something? He had to close the business?
Yes. Actually, a friend of mine who owns a gym, there was a case, and they had to close for at least, I think, 2 weeks.
Yeah.
So it's definitely harming businesses and small businesses and the economy.
I think
as a
everyone.
whole.
Yeah.
Yeah, but it looks like the government's taking a different approach now, where we have 2,000 cases and the country is open. I don't know if that's a good thing or a bad thing. It's good for the economy, bad for the health, but
it's a little bit
can't have
stressful.
both.
It's a little bit stressful for
Yeah.
the health professionals today who are hoping to have a break over Christmas or something. They've all been placed on red alert now. So, you know, there is that harm. I'm a big supporter of we stay open, but I'm a big supporter of people take a lot more personal care to, you know, limit the impact on our health system. So hopefully we'll get through this without lockdowns. But there are going to be disruptions. That's ongoing. So it's kind of a diminished but rolling, ongoing around the world global supply chain disruption due to still Delta and Omicron.
yes.
But in terms of the Australian markets that you asked about in the outlook, I am bearish Australia. You know, I am Australian, therefore I am Asian, therefore I am proud to be in Australia. And I've got to say, quite objectively, that our internal situation will not be as great as our political leaders and the RBA governor have been telling us they would be. Everyone said there'd be this boom coming out of lockdowns, and this is like this small bounce coming out of lockdowns in economic behaviour and activity. And they're far too optimistic about the future. It could have something to do with an election next year, that for some reason our leaders are very optimistic about the future. I think it's going to be an ongoing struggle without normal immigration, without normal global travel, with a diminished trade, given that China is slowing so much, given our deteriorated relationship with China. That's not, we're not going to be increasing our exports in volume, at least, to China.
Especially with iron ore now, and with demand dropping from China because of the real estate issues that they're facing there. So it's a massive challenge in Australia for sure, in terms of mining, the markets, the Australian dollar. But what about the US dollar? What about America? Are they looking better?
I think I think the US is looking a little bit better, but again, it's going to have below trend growth. And they will be hiking rates, as I said, 5 times next year. But hopefully they won't be able to hike. They won't have to hike as aggressively towards the end of the year or into 2023 as the RBA will have to do, because it starts late. So the later you start, the more aggressive the rate hike cycle. So that's why I'm a little bit more worried about Australia than the US. And I think the US dollar will be strong because all of this ongoing uncertainty about Omicron now, and the fears of Omicron may in fact be greater than the reality of it. It's just that it's still early days and we're not entirely sure, right? But it will cause supply chain disruption. And in amidst that uncertainty, people will still flock to the US dollar as a safe haven. So I think the US dollar will be strong. We saw a good rally in sterling. I'm not sure that will be sustained, because really it's a people who've only been in markets for a few years think low interest rates are normal. They're not. You just have to look at a 25-year chart, and rates go a lot higher than this. So I think the Fed hiking 3 to 5 times next year will see the US dollar again assert itself relative to sterling, but certainly euro. And as I said, I'm bearish Australia, so I'm bearish the Australian stock market. I have been for 4 months. People don't realise it, but the Australian stock market's been weak for 4 months now, a third of a year, and people are still excited about it, which is pretty remarkable sentiment, right? But I think, and the Australian dollar, I put out a forecast when it was at 77.45 that it was 70 cents. We've done that. And then at 71 cents, I said it's probably going to 65 next year. So 65 cents in 2022, everyone. And 2023 for the Australian dollar, you heard it here. I think it's a risk of 58 cents. But I think 65 cents is a reasonable target given what's going on in the world, and we are a trading nation. So now, quickly, sorry, it took up all that economic space. So what's happening in the global space for ACY?
Well, look, it's been challenging in the last couple of years, obviously because of travel bans in Australia. We're not allowed to leave the country easily. You need permissions and so on. So it's a bit of a challenge, but we still achieved a lot in the past couple of years. So even without being able to travel, we actually set up a few partnerships and offices in Asia Pacific.
So what would be the highlights of that, the locations around the world?
Yes, so basically we actually set up an operation this year in Malaysia, in Vietnam, in the Philippines, in Thailand, and our operation is expanding in the Middle East as well. So we set up an office in Saudi Arabia. It's a representative's office, and we're going to set up another one actually in another city in Saudi Arabia. ACY is also looking into obtaining a license in Dubai, so we actually applied for a license, and we hope to be in Dubai by mid next year, hopefully.
That's
so
very exciting.
That's going to be very, very exciting. So as you know, ACY has gained a very big following and a very big name in Asia Pacific, in China region, Malaysia, Vietnam, and so on. And in the last couple of years, we gained a lot of attraction in the Middle East. There is a very big market for us.
It really is. It really is the Australian firm doing well on the global stage.
Yes, definitely.
So that's a message we have to get out there to you more and more. And Dubai is really interesting because it's been such an important travel hub for so long. And obviously it's always had a lot of financial power, but I think it's starting to take on more of a kind of New York role or a Hong Kong role for that region, Dubai.
Yes, it's actually a very interesting region, Dubai. It's been growing very fast in the last, 20 years. And there's a lot of advantages for global organizations to be in Dubai. Part of it is the location, geographical location. It's just close to everything. If you want to go to Europe from Dubai, it's like 3-4 hours, or if you want to go to Africa or whatever you are, it's just a very good location. And the whole system is good in Dubai as well, the political system, the economical system. And
Stable,
taxes as well.
reliable. Yeah.
Taxes. So if you live there, your taxes are low.
Okay, and we've
So
been,
it's an advantage.
and,
yeah.
and that, is that a place that's popular for fund managers?
It is. It's popular for our industry. There's actually
Okay.
a lot of Australian brokers that are actually based in Dubai.
Okay.
So
And what about our funds management services? Can you tell us a little about those?
Yes, of course. So we are popular amongst fund managers. ACY is popular. The reason is because we have a team dedicated for fund managers here at ACY. So an entire team basically focusing on services for fund managers.
Okay.
Okay, and that is we offer solutions such as the multi-account manager that we offer to fund managers. Is by a company called MetaFX. So it's the best actually MAM system available in the market. So we have fund managers that work with us from Australia, from Europe, from the Middle East, and it's a growing space for us.
Okay.
We offer the solution on both MT4 and MT5 and multi-assets, of course, so you can trade FX, commodities, cryptos, share CFDs and so on.
So you can set yourself up, if you're a talented trader, you can set yourself up relatively quickly as a fund manager
Exactly.
globally with
Exactly.
ACY.
Yeah, so you don't need to have a company. You can set up yourself as an individual as well.
Right.
So as an individual, if you're a successful trader, you believe you have a good trading strategy and it works,
Yes.
well, we can offer you the opportunity to get a MAM system.
Okay.
And once you have a MAM system, then you can
It is a
manage
great.
your-
It is a great team you have. Sorry.
Exact-
Go,
yeah, thank you. So it's there's a lot of opportunities for successful traders to actually become fund managers.
Well,
there's
there
a-
you go, everyone, because
Mm.
I know there's a lot of talent out there, and
Yeah.
often, and also take this on board, everyone. If you're an individual investor, you have a huge advantage over the large institutions. I've worked in some of the biggest investment banks in the world, and I've got to tell you, the committee process for trading and big portfolio shifts is very slow. As an individual investor today, you're greatly empowered by having access to the same information, ideas, thoughts, and data, but you can make your own decisions a lot faster, which also can lead to an empowering of a startup funds management business. So there's an idea for everyone.
Yeah.
Ella, look, great speaking to you, but I think we've gone on a bit too long. Folks want to get on with their day. We wish everyone the best.
Yeah, thank you.
Yeah,
Great speaking with you and great to see
yeah.
you again.
Yeah, you too, Ella.
Yeah.
Thank you very much.
Pleasure.
Clifford Bennett, ACY Securities Chief Economist, and Ella.